Today on the Bullpen podcast, we're talking disciplined investing and smarter decision making with Seth Cogswell, founder and managing partner at Running Oak Capital. Seth's efficient growth strategy has quietly outperformed most of the market, and he's here to share how rules, discipline, and common sense can drive success in business, investing, and life. Seth, you ready to jump in?
Let's go.
You've described Running Oak's mission as simply making clients' lives easier. That's a powerful statement. What does that look like in practice, and how do you build an investment process around that idea?
This doesn't entirely answer your question, or I'm gonna go a roundabout route to answer your question. I had this realization at one point where our performance was remarkable, and part of the nature of the business is people haven't heard of you, especially when you're starting out. So your outreach is cold emails or cold calls or whatever. And I realized, as much as I love writing, to a large extent, the emails that I was sending were probably somewhat identical to the emails they're receiving from every other manager. The only difference was the numbers. And sure, our numbers were better, but if you just glance at the email, you realize people might just think it's the exact same as every other email without looking at the numbers. The other thing is, nothing matters more in life than communicating effectively, particularly when you think of sales. And jargon in every industry annoys me. I've never had a real job, so I've never had to embrace jargon and work in a bureaucracy like others have. And so I'm allergic to jargon to a large extent. I'm a little less allergic to the terms return and risk and all that stuff. But at some point I realized that for most people, they're just two words that sort of mean nothing at this point. And so coming back to your question, as far as kind of the well-being of individuals, I started thinking about what those really mean. Return is the ability for someone to be able to live the life that they want to, right? Or maybe even above what they had dreamed, right? So, and these terms also kind of minimize how much has gone into the result, right? Let's say the average person works 40 hours a week. Hopefully they get 2 weeks of vacation a year. So they work 50 weeks a year, 40 hours a week for, 3-4 decades. And how many people actually like their job? I don't think it's in the majority, right? And so you have people really working away doing something that they don't want to do, and they're doing it to provide, at some point, once all their expenses are all out, they're living their life, and hopefully they have a little bit extra. And as that grows, it turns into savings. And then they're investing that savings in order to have a better life, right? So this brings us all the way back to return and risk. Return is the ability to use that savings they've worked so hard for to have a better life. Great. But on the risk side, I think that matters so much more. And so just that word doesn't speak to how much it actually means to people. And I think even people don't realize how much it means to them. Risk is the chance that when you are ready to retire, that money that you've worked so hard for isn't there. It's the risk of not sleeping well at night and being stressed. And so, I've really still, even the well-being of others, I still don't feel like I've nailed it. But really the goal is to touch on how much it truly matters to people emotionally, to get them to think about the true benefit that we're providing, or ideally that we're providing, which is the ability to sleep well at night, to provide the lives that they want with their kids, whatever it is, right? Now, as far as how we do that, we do it in a very thoughtful, common sense, simple manner, in that, I would argue that one of my favorite lines is supposedly Mark Twain, where he said, "I was going to send you a short note, but I didn't have enough time, so here's a long letter." Something like that. It's really hard to boil something down to its simplicity. I mean, for me, for instance, I just spent basically 40 hours in the last 2 days trying to write our most recent newsletter, because there's so much going on, and just figuring out how to formulate my thoughts and boiling it down. It's simplicity matters. And the strategy, what we provide, has a 5-decade history, and over that history, it's been boiled down to its simplest and I'd say most meaningful parts. And it's really just simply really focusing on that return and risk. Seek to invest in companies that are growing as fast as possible because you invest in a company that's growing in value. No arguing that's not a good thing. And the more it's growing in value, great. But again, on that risk side, it's also really doing all that we can to maximize that growth while trying to avoid significant losses or significant dips, because nothing, one, destroys exponential growth of savings or exponential growth of an investment like big drawdowns, but also, yeah, I think when it actually happens, um, having your money not be there when you're counting on it is so much more important than everything else, right? That is what matters. A lot of people don't necessarily think of that ahead of time, but that's certainly our goal, is to provide that.
Peace of mind, for sure. Running Oak strategy is described as rules based, reliable, and unemotional. In an industry driven by emotion and short term noise, how do you maintain that discipline, both personally and organizationally?
This is an emotional time in the world, certainly in the market, and therefore for me, because I see that my greater purpose is to try to help as many people as I can. I have absolute faith in our, I guess, sort of product or the service that we provide. And if I don't provide it, then I've failed. Right. My job, the way that I see it, like my true role, is to communicate the value that we can provide effectively so that people not only listen, it hopefully makes them want to make a change so that their lives are better. Because that's what I believe. I believe that we will make their lives better. It's been an emotional time for me, trying to figure out how to deal with this very emotional time. It's a crazy moment. But really, it's all about discipline, right? Life is uncertain, business is uncertain. And whether it's having a framework, like a structure in place, or whether it's just constantly having checks on yourself so that you're making objective, unemotional decisions, because it's easy to get carried away in one way or another. We all do it. That's really essential. And that's both a critical part of our process, our investment process, so that our emotions don't get in the way of the value we're looking to provide clients. But it's also an essential part of running a business. I meditate probably 20 to 30 minutes every morning for this purpose, largely, whether it's to kind of control my emotions or whether it's to direct my emotions in the most positive and productive way.
I love that. Your efficient growth strategy has outperformed 91% of its peers over the past decade. What's the biggest misconception investors have about what drives that level of consistency?
One, that annoys me because we were outperforming 99%. Not too long ago, we were number one. Um, the thing that most or many don't appreciate or understand is, uh, many over the years have learned that chasing returns is a bad idea. Unfortunately, what drives me nuts is they haven't learned the corollary, which is doing the opposite is a good idea. So if you don't want to chase the hottest stock, right? If it's up a whole lot, there is a decent chance, because things go up and down and emotions rule the stock market, that if it's up a whole lot, you might see the opposite. Now, people have learned that lesson. What they haven't learned is that if something's down, now you don't want to, there still has to be discipline. There has to be thought. This isn't a blanket statement, but if something that has been proven to have value over a long period of time is at a discount, why aren't we buying it? There's a phrase, and I'm sure I'll mess this up, but basically, the stock market is the only store where when things are on sale, people run out the door. It's nuts. And then that's the thing that I'm constantly thinking about and trying to convey to people is our strategy has a 36-year history of performing especially well, a 5-decade history of, again, doing the same thing. And over the last 6 months, our portfolio has underperformed to a degree that's rarely been seen. And it's because everything that we invest in, which is companies that make money and companies that aren't about to go bankrupt and whatever else, that has been the least popular investments. And the most popular investments have been the opposite: meme stocks, unprofitability, highly volatile companies, all the things that you would say that you don't want. Those are the things that have performed the best. And I see it as an amazing opportunity. I look at it as you can get our service, our strategy, which I would consider, let's say, a Lexus, because it has a long history of performing really well, but you can get it at a price of a Camry. Um, if I'm driving by a Lexus lot and I can get a Lexus for the price of a Camry, even if I don't need a car, I might just, assuming I can afford it, I might just buy it right then anyway. But getting people to, again, the stock market, when things are on sale, people run out the door instead of piling in. That's the one thing that I want people to understand is it's been consistently good, but that at the same time it goes up and down. And this is one of those periods where you can get it at a significant discount, which is an amazing opportunity. Now the question is, can I convey that in a convincing manner?
Running Oak has been executing this disciplined approach since the 1980s through multiple market cycles. What's one lesson from past downturns that continues to shape how you invest today?
The one lesson is that downturns can happen. It's basically been, I would argue, because I've experienced a true bear market, I would argue that we haven't experienced a bear market since 2008. We've had some dips. Most of them are really quick. And the speed of the dips actually have convinced people to be even more aggressive, right? That it's led people to believe that when the market goes down, it automatically goes up. Buy the dip, which is a phrase for whenever the market dips, you just pile in. That has never been more successful than the last year or two. And it's taught people really alarming lessons. And so really, again, the big takeaway from downturns in the past is just that they can happen. And it's worth knowing that, right? It's worth keeping that in mind so that you are making decisions based on that possibility. Because again, the risk of all that you've worked for and then all that maybe you've invested and succeeded with not being there when you need it, that is the number one thing that people should be prioritizing over everything. But when emotions, we've already talked about emotions, when emotions are running hot and people think the market will never go down, that number one priority becomes an afterthought.
Running Oak is a boutique firm with big results. What have you learned about leading a small, high-performing team at a competitive industry dominated by giants?
I'm still always learning, especially on that. We are a lean firm and always will be. One of the things that I've learned is in my prior career, I was a trader, and then that firm created technically a hedge fund that I was managing. But I was responsible for training traders, pretty consistently. And part of that role was looking at resumes and kind of selecting not just who was offered a job, but who I wanted to train. And so I thought about this a lot, in my 20s when I was probably young and dumb, or certainly dumber. I'm sure there's still areas in which I can improve now. But, back then, I would lean toward, let's say, athletes, right? Because I wanted someone that had discipline, that had succeeded elsewhere. I thought that they would have drive. And my success rate was not real high. And I think part of that was because the business is really hard. So maybe the success rate wasn't great in general. But as I have been running Oak for 12 years now, and I really think about this more and I read more on this because I'm getting to a point as the company grows that I have to think about this a lot more, is that at this point, I almost feel like intellectual curiosity is maybe the number one thing. I have found, without naming names, that it's very hard to find people who are proactive. Proactivity is it's a rare thing. And I have also discovered there's Shoe Dog is a really good biography. It's about Phil Knight and the founder of Nike. And there's a really funny part where he talks about his managerial style, sort of. He doesn't refer to it in that way. He basically just says his first guy that he had working for him was in LA, and he basically would just not only never talk to him, but the guy was constantly sending him letters and he just wouldn't even answer them. And that's kind of, I've discovered that's how I manage people. I am very fortunate to have a very capable wife who makes better decisions than I do on a regular basis. And she told me there's a guy that she had worked with, and she had been at some of the biggest firms. And she's like, this guy is incredible. If you're going to hire one person, it's this guy. Now, I did have him come up and we spent time together, so I didn't entirely trust her word. But it was definitely, it was one of the best decisions that I could have made because he is amazing. And he fits my managerial style in that he's proactive. He complements my skill set so well. He does everything I don't want to do, and he does it better than I would ever do it. Now, so a lot of that is looking back at the decision that was made, because I don't know if I can give myself any credit for it. So it's more just, how do I repeat that? And that's, again, I think that intellectual curiosity, just sort of a focus on details, intelligence, all these things are just really important. I don't know that background or past experience really matters. I'd say it certainly matters far less than most people probably think. I think what matters
Sure.
most is just, can you find a person that's driven to be their best and learn as much as possible?
No doubt. Whether it's in investing or business leadership, uncertainty is a constant. How do you approach decision making when the data isn't clear? And what can business owners learn from that mindset?
Again, I was a trader and then managed a fund, and every decision that I made because I was investing was very clearly defined as sort of return and risk, right? So what are you risking to get? Because it's uncertain, right? And if you really take a step back, people don't love this, but it's whether it's investing or whether it's running a company, it's gambling. It's uncertain. The outcome is uncertain. And so you're risking something to make something. And I think that's really the key, is just consistently forming a habit. If you do it enough, it becomes second nature, and you do it just instinctively. But is every single decision is just a matter of, what is the risk and here's the return. There's something about when you're conscious of something versus it just sort of hovering in the back of your head that helps you face it and embrace it, versus if you don't really think about it, but you know it's there, then I feel that can potentially be crippling or hard to overcome. And again, so I'd say your answer. There's actually a really good book, and I'm gonna mess up the name. This It's not The Psychology of Money. Either way, awesome book largely on gambling, but it really goes into this risk reward assessment. And that is the key with really almost every decision we make in life, but especially in business where money is determines whether you win or lose.
Sure. You emphasize never overpay. That's true in investing, but also a powerful business principle. How do you personally avoid overconfidence in markets, business decisions, or leadership?
So one, I'd say the rules that we invest in provide a framework or kind of ensure that overconfidence is, I don't have to worry about that, right? It's when a company hits a certain point, a predetermined point, we sell, right? We don't want to own something that should go down. I did not create a strategy. Again, my father did. So I look at it as, I'm fortunate that that's in place, because, and again, in my prior life, I was having to make that decision on a uh, less objective basis. And I'm sure I failed on a regular basis. Selling in overconfidence is one of the hardest things that you can possibly do. And so from a logistical standpoint, or from a kind of a service standpoint, that's awesome. Now, as far as personally, maybe I'm lucky that I'd say that I've failed more than pretty much anyone. I don't know if I've ever met anyone that's failed more than I have. Now, part of it is, again, when I was a trader, every single day I had a lot of decisions all day long that I could fail at. And the key is, I see that as one of the best experiences of my life, the most formative experiences, because it's failing and then getting back up teaches you resilience. It teaches you that, this too shall pass, and you keep pushing yourself. Nobody's achieved their potential without pushing, and that's going to result in failure, and that's going to be very humbling. And so, I better be humble, because I've, again, I've failed more than anyone. I've been wrong more than anyone. And luckily, the quantity of decisions I make are so high that I've also maybe been right more than most. But that's really what has helped me evolve to the point where I know at any given moment that I could be getting carried away. And so there's always this sort of governor on myself.
Makes sense. Running Oak focuses on transparency, daily liquidity, and client control. In a world where financial complexity often clouds understanding, how do you keep things simple and build genuine trust?
Again, you mentioned transparency. Trust is largely a matter of being able to kind of clearly see what's happening. But trust is also a natural result of integrity and discipline. There's a phrase that the best predictor of future behavior is past behavior. And that's just because we're people and, we're built a particular way and we tend to make decisions in a similar way. And so really a lot of it is just repeatedly making good choices will result in trust. And then again, transparency, being able to kind of see how our clients' money is being invested certainly helps a lot as well. And then I'd also say the understandable, the degree to which our strategy is understandable, right? So that simplicity of the philosophy, which is basically maximize earnings growth because we want to invest in companies that are growing in value as much as possible while being very disciplined around valuations and risk. It's very simple. And because of that simplicity, because people understand it, that makes it also very inherently transparent and gives people more confidence.
Sure. You said there's a cost to volatility. How do you help investors and even team members understand and respect risk without being paralyzed by it?
I mean, to a certain extent, risk is just part of life. It's hard to achieve much if you don't put something into it, right? And so that's risk. No matter what it is, right? If it's sports, the risk is you work really hard and then you fail. It's just the nature of striving. And I think that again, particularly for a small business, which I would imagine many of the viewers of this podcast are probably small business owners or work in small businesses.
Yep.
And small business is really the founder, right? Like the founder drives everything. The founder ethos of the company, the culture probably somewhat mimics the founder's view on life. And again, that past experience of failing more than pretty much everyone and getting up and being successful. And then, it happens again. You get up and you be successful and you just keep pushing. That resilience is what helps you, that resilience and that knowledge that you can get back up and keep striving. That's what helps people, I think, embrace that uncertainty or face it.
You've built a strategy that thrives on rules and logic, but business and leadership still involve people. What's something you've learned about human behavior that has surprised you the most along the way?
Again, I think it's that drive for curiosity, which is something that I never would have valued when I was younger. Maybe both a gift and a curse of youth is that you see the world as black and white. And then as you grow older, hopefully, as I guess there's plenty of older people also see as black and white, but I feel that you start to see the gray and the complexity. And so it's just not as simple as we all think it is. Everybody's nuanced. And it's really the people that live in the gray, so are inherently nebulous. Those are actually the people that I would say that I want to be a part of our team because they're going to be thinking about both sides. They're going to be pushing on different things that I may not be pushing on. That is where you excel.
Big thanks to Seth Cogswell for joining us on the Bullpen podcast. If you want to learn more about Running Oak Capital and the efficient growth strategy, visit runningoakcapital.com or look up ticker RUN. If you enjoyed this episode, describe and share it with someone who's serious about growth in business or in investing. Seth, thanks for being here.
Appreciate you having me.